Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your weekend update for the metal markets on this Friday, the 20th of October, 2017, and it's about 12:50 p.m. Central Daylight Time. You might say, why am I doing it now? First off, I like doing the metals earlier because the settlement prices come in at 12:30 Central Time, 1:30 Eastern Time. Now, the events of the day, and one of the events I'll talk about that might have impacted gold over the weekend, the event of the day was the surprise passage, 1-2-3, of a Senate budget deal. Now, that goes on now to the House, so Congress gets together and hammers out final points, but the Senate got something done. Unlike Obamacare or anything else, they lost but one vote. Senator Rand Paul, who's already tweeted that he is going to vote positive for the tax reform. So this has kicked the market, obviously, up. It's looking at the idea of growth. If it's budget's there, if tax reform's there, is infrastructure far behind? You see what I'm getting at? So that's the positives. Dollar market rallied on that news. The euro down, the Swissy down. The British pound's a little different, and that's because Angela Merkel offered Miss May, the Prime Minister of the UK, a carrot. It's really about how much money now is the UK going to pay to get out of the EU as it is at this point in time and get the trade deal set in place. So the market views that as a positive. Bonds and notes down, and all that pressures the metal market. So let's take a look. First off, you know gold is priced in dollars. Therefore, a stronger dollar works against it. Excuse me. Tomorrow, we have in Spain the Catalonia event. Is Article 155 going to be invoked in Madrid? And what that does is it's the beginning of a takeover of that region. It has never been invoked before. The Catalonians can still prevent it by saying they're not going to declare independence. If they do, who knows what will happen. I wrote in my newsletter today that if you're reading Financial Times and others, the word is that maybe the TV stations will be taken over, the police force, and then the gradual squeezing of the market by the finance, because at the end of the day, Spain runs the finances. So hard to see what that means, but all you've done on a monthly chart is come back to this center line. And what else has happened? I want you to look at how long we're going sideways. Unless some piece of news comes out that's just going to take gold down sharply, the odds are favoring this as forming long-term on the monthly chart, a base area. That's all that I can say about it. It hasn't broken out yet to the upside. It's certainly not in a trend. It seems to be caught between 1162 and 1279 on a monthly basis. Well, actually, I gave you the wrong number at 1279, 1364. 1279 is the last price. 1364 to 1162, approximately a $200 range that the market's stuck in. When we look at a weekly area chart of closes, I look at this low because it was lower than these. So 1209.70 up to 1358.50, we corrected, had a bounce, pulling back. If you close under this number on a weekly basis, right in here, and I can give you the specifics, that number is going to be 1271.60. It will set off a down thrust in the market. It hasn't done that yet. It's at 1279.60. When we look at a weekly bar chart, you see how you came up, you corrected. Now, is this an outside week down? As of this moment when I'm talking, no, it is not. You'd have to get lower than 1279.60. You'd have to get under last week's low at this point, and that number would be 1279. Can it happen before the close over the weekend? It certainly could, but I'll wait and see what it means anyways. On terms of the swing line, it doesn't mean an awful lot to me. What it means is right now you've got a lower low and a higher high. Now, if you take out this week's low on Monday, Tuesday, whatever day, you're going to end up with lower highs and lower lows. That will turn the trend down until the market gets back over 1303.80, this week's high. Look at where the support comes in. The support comes in at 1278.10, the 18-week average, and it's done a nice job so far of being a zone of the support in the marketplace. What happened on the rally that we saw about 5 weeks ago is that you lifted the upper black line and the lower back line. You widened them out. And what that in essence is the black lines are Bollinger Bands, an algorithm designed to give you resistance support lines initially on a market. A market's going to trade in between those lines 95% of the time. That's how the algorithm is built, and it will adjust to the weekly and daily ranges depending on what kind of chart they're on. They're just staying sideways, so they really haven't changed where they're at in support and resistance, and we're still well over the 100-week average of closes that we haven't challenged since back here in July. I'm not saying you can't challenge it, I'm just saying it hasn't. Where's the bias? The bias is up in the market because you're over the 18-week average of closes. The momentum is still pointing down. You got the market fighting itself. You don't have a trend in terms of a pattern of higher highs or lower highs. You've got a higher high and a lower low. There's nothing there at this point. When I come to the GLD ETF, you have a similar pattern. You got a lower low, a higher high. We widened out the Bollinger Band. The bias is up because you're over the 18-week average of closes, but momentum is still pointing down. In the gold miners, the setup here is different than everything else, and as I've told you before, this chart seems to be the one that's leading the market in gold as a whole. The pattern right now is one of higher lows and higher highs. Admittedly, we've just backed off with a lower high from that one. So when I take that into account, what I look at is what event set the thing up in the first place, and it was the higher lows. So I'll say temporarily that the uptrend is in place on the swing line, but with a reservation because of this. I see two numbers that can set off the trend now on a weekly basis. Get over 23.99 and you will have a new pattern of higher lows and higher highs, putting into play the potential for the upper Bollinger Band. Converse, take out 22.81, you end up with lower highs, lower lows, setting up 21.18. There's a reason the market's sitting just about on that 18-week average. We've got to wait and see what the market wants to do. In the silver market, we're also stuck at what I'm going to call midway on the chart. You're stuck at the combination of the 1695.40 area, the 100-week moving average of closes, and the 18-week at 1684.10. Momentum is down, bias is up because you're over those averages, and you have a pattern of a higher high and a lower low. Again, nothing definitive on the chart. The copper market remains in a definitive uptrend on the weekly chart. All that you did is you've got the higher lows, higher highs. You went up again to the upper Bollinger Band, ran into the resistance there, but that's it. What I think this market will wait for is on the 24th, when the Chinese Party conference is over, we will see the plans that come out within China, or possibly just before that, infrastructure plans, what they're intending on doing, how they're intending to deal with credit issues in the country, blah, blah. They, being the largest, consumer of copper in the world, if they're still on a growth, especially internal growth, that should be supportive to that market. In the platinum market, the problem this market is facing is what? Diesel cars. That is the issue with this right now. All right, manufacturers are going electric. They're getting out of diesel around the world. They're going to gas-powered. So you have a market that's got lower highs, lower lows in a downtrend, downside bias, momentum pointing down. The palladium is what's used in what? Gasoline-powered cars. Higher lows, higher highs, and uptrend. Now, I'm making it more simplistic in my definitions, I know, than every other part of the fundamentals there. But I think I'm hitting the core spot for you. Momentum up. Remember, I don't look at overbought, oversold conditions on weekly charts. I just look where the momentum is pointing. So up there, bias up, trend up, resistance 997.50. Now the dollar index, with all this great news, all it's done is come back to the 18-week average of closes. It's got a pattern of the swing line up, momentum is up, and it's fighting literally as I'm talking to you right at that number. Let's assume it closes like this. It will have upside bias and a trend up. The key to this market is not taking out 92.59. If it does, this all fails on you, and I will then say, I think the lower Bollinger Band comes back into play. Let's assume the market clears 94.10. I always like to give every side of a story. As long as this pattern stays up, you've got higher lows, higher highs over the 18-day average. Wherever this Bollinger Band falls on Sunday night when the markets reopen could become the resistance point. I want to remind you about one of my favorite magazines, and it's Modern Trader. Now, the November issue is what's out, but this is already getting into the latter part of October, so maybe by next week, certainly the week after at the latest, we're going to get the December issue that comes out, and I'm sure it's going to be special. Generally, the Christmas issues are. They talk about trading techniques. This is a Forex method that they show. If you're a chart pattern person, I'm not really. I'm an indicator person, not a chart pattern. But if you are, it talks about the patterns, how to look at them, what they do. I like the indicators, as you know. Then to match everything up, they put out what's called, what? They put out their market focus. That's the daily publication. So when you look at this, and I keep hitting the wrong button here. This is what the cover looks like for the November issue. These were the stories that the market held, and it's a mixture. Do you want stocks? Do you want ETFs? Do you want options? Are you looking at the commodity market? Are you looking at precious metals? Everything is covered in some manner in there. Then to back that up for you, what they do is they put out a group of technical stories that come in. And these are great because you learn things that you probably don't know. And as a market technician, is what I am, I look at that. And then, of course, they have some really interesting, just general fun stories. Again, these are what the articles look like. They're always accompanied by great graphics, which I love because it tells the whole story of what you look at. Now, if you go to their website, you will pay $79 for the magazine, along with access to the daily publication, which shows up in your mailbox, email box, absolutely $79. Through us, it's free. Same publication, same thing. We have been with them for decades, and we're able to do that. All you need to do is give us a call. You can go to our website and sign up for it. It's all going to come out by email to you. You can click up here at any point if you're watching me on YouTube. And underneath us on many websites, it says, click here for Ira's free information. Do so. Have a great weekend, and I'll see you all Monday.